Evening, everybody. Sorry for the slight delay in getting started. I can see loads of participants piling in, so we'll just give it a couple of minutes and then we'll get started. Just a note on the process throughout. You'll be able to see at the bottom of your screen, there's a section labeled Q&A. We have a team of consultants who are behind the scenes who will answer any questions that you send through. We'll endeavor to answer any questions that you have straight away. Anything that's not answered straight away, we will respond, follow up on a one-to-one basis, one of the consultants, and answer any questions that you have. So don't be alarmed if you don't have the answer straight away. We will definitely get back to everybody. Again, also in the chat function, you should see the ability to book a call at any point. Again, if there's anything you want to discuss on a further basis, one-to-one, please feel free to book a call and we'd be more than happy to reach out to you somewhere down the line, whenever works for you. Excellent. So, got a good number of participants, so we'll get started. The running order for this evening is we'll start with Giovanni, our CEO, who will give a bit of an overview of Moneyfarm and who we are. Obviously, given the nature of the migration, that's probably a burning question for a lot of you. Then myself and Byrnes, a familiar face hopefully for a lot of you, we will have a conversation about the differences between Moneyfarm and Wealthsimple and how the migration will work and some of the individual factors. In this section, we'll try and touch on a couple of the questions asked in the Q&A section if we can, but we'll obviously talk more broadly as well. And then finally, Richard Flax, our Chief Investment Officer, will finish off and he will go through our investment strategy, the ins and outs, and how we manage the portfolios themselves. Again, at any point of the thing, please feel free to reach out to us, book an appointment, etc. We can talk through any of the specifics in more detail. So without further ado, I'll hand over to Giovanni and he will go through Moneyfarm and our history. Thank you, Jim.
Thank you, everybody, and very excited to be here and to welcome you, hopefully on board to the Moneyfarm client base very soon. I'm Giovanni. I'm the co-founder and the CEO of Moneyfarm. I've been running the business since we built the company. I'm based out of London, so this is our London office, and I've been based here since 2005. And I will say the relationship with Wealthsimple goes way back. So I know your CEO quite well, and we work in the past and grow since it's kind of a small industry. We really try to make the model, and I would say we learn a lot also from them and their Canadian experience. Moneyfarm was built with the purpose to make finance simple and accessible. That was kind of what we set up to do at the beginning when we founded the business. I used to work for one of the big banks, and it was clear that there are better ways to manage their money, and that there are better ways to use technology to allow people to invest in the best way at the lower cost possible with let's say, the possibility to really enjoy long-term positive return. So accessibility and simplicity has been one of the core driver of Moneyfarm from day one. And what we focus on in terms of what is our value proposition is really what we call internal investment success without the hard work. So we believe that all of us has a lot of busy lives, that managing an investment portfolio requires time, dedication, and expertise. And the best way to get there is making sure that you have somebody who helps you along the way in understanding what your goals are, what your objective, gives you the right support, and makes the investment decision for you, at least for a core part of your portfolio. So investment success without work is what we believe is being the key driver of our value proposition, and what we really strive to continue to achieve and innovating across all the product dimensions. When it comes to the value of Moneyfarm, we always refer to these three things. The first one is about the relationship. We think wealth management is about relationship. We think that ultimately, even if we are a digital enabled service, we do create a relationship with the customer, whether it's through content, whether it's through phone call, whether it's through our investment advisors, an investment consultant that you hear a lot. But ultimately, we believe in relationship also internally, but also most importantly with our customers. The second point is about trust, and trust needs to be earned. So you are new to Moneyfarm, and I think it's our job to make sure you can trust us with your money and with your saving. And we need to make sure that we give you as much transparency as possible in order to make you understand what our choices are and why you should trust us without necessarily giving for granted that you need to trust us. So trust is really important. It drives success. It drives the way we engage with your customers and with you, and it drives also internally how we conduct business. Finally, we're an ambitious company. I think we're just at the beginning of re-engineering or reinventing wealth management. Even though if we've been around for a while now, and it's been almost 10 years, so we do really believe that we are really at the beginning of the journey, and we dream big. Wealth management is an industry which takes time, and I think that each one of us really takes time to make decisions about our money, and rightly so. So we don't have a urgency necessary that we need to get there in the next few months, but it's something that we think is gonna lead us to continue to innovate and hopefully, given our results so far, we can continue to excel and build a great business that serves a customer in a very positive way and creative value for all our stakeholders. I will say also a word about our management team. If you look at our management team, we really have a combination of people coming from deep investment management experience, like Richard Flax, our Chief Investment Officer, which you're gonna have the opportunity to meet in a moment, and people who comes from the direct-to-consumer experience, like Isabel as Chief Product and Commercial Officer. We do have we really try to get the best people around, and I think that we really work hard to complement financial services and wealth management expertise on top of technology and direct-to-consumer expertise to make sure that the business is successful, but also it's really customer obsessed, and we can leverage the best of the investment world with the best of the consumer world, which is how do we take care of our customer at scale through technology. I would say that's it from my side. And I'm sorry, I got another slide. Finally, I give you some metrics about how big is the business, so you can also get a perception of how the company is organized so far. We're about 150 people today. We're about more than 2 billion in asset. We have over 65,000 customers, meaning people who has invested money with us, and we're growing at close to a triple digit year over year. We have raised capital from both strategic partners such as Poste Italiane and Allianz, but also from venture capitalists and other firms. So I do think we have a good, I would say, set of incentives among our shareholders to make sure that we can think about long-term value creation rather than maximizing short-term opportunity. I will say that's it, and I will pass it back on with Chris. Again, I'm super excited about this, and we'll be working with the Wealthsimple team, as you can imagine, for quite a while, and this will help us really continue to grow in the UK, which is our core market after Italy, and we really believe that we can fulfill your needs in the best way possible. And thanks everybody. So over to you, Chris.
Thank you, Giovanni. Very helpful. And like I said, any questions on any of those details, please come into the chat or contact us directly. We're more than happy to help. I'd like to welcome along Brian. So hopefully to you guys, a lot of you guys, he's a very familiar face. He's the manager of the advice and the customer support at Wealthsimple. And I've actually been working with Brian quite closely for the last few months. It's been actually really nice to get to know Brian and his team at Wealthsimple, and it's been a real pleasure working with them. Welcome, Brian.
Thanks, Chris.
So, Brian, we'll start off with a few questions. Actually, Richard, if you just go back a slide for a second. Basically, why did Wealthsimple choose Moneyfarm as a partner? I feel like this is a question that quite a few people are asking.
Yeah, very much so. I think it's the number one question that we've been asked over the course of the last week. So there's no better place to start. I know you'll go into some of the details in the moment, but really the overarching reason of why we kind of chose to work with Moneyfarm for our clients going forward is very much that you've got the same ethos and beliefs that we do when it comes to investing and managing people's money. We have a very clear idea on how people can hit their financial goals and reach financial freedom. And I know that Moneyfarm have the same idea, just in terms of things like low cost diversified portfolios, making sure that you keep your fees under control, and then always having the human touch, the aspect there as well. So we understand, or we think we understand, why clients have trusted us to date with their savings and their pensions, and we take that responsibility incredibly seriously. And we wanted to find a partner like yourselves that has the same view and the same beliefs that we do. So we've designed the whole process to be basically as seamless as possible, and we'll go into that. I know there's some questions in the chat about how that's going to work, but we do want this to be as seamless as possible, and for people to move over to a very similar service with people that take the same level of responsibility as, say, from working with your team over the course of the last couple of months. As I say, we know that you will look after our clients extremely well.
Fantastic. No, brilliant. I've just, before you go on to that, I've just seen a question actually from somebody about the presentation. So one thing I forgot to mention at the start is, as a follow-up, we will send an email which will have a recording of this webinar. If you've missed any part, we'll have to jump off early, and we'll obviously have a copy of the presentation for any of those who need it. So don't worry, you'll get plenty of time to go back over any details. But sorry, back over to you, Brian.
Yeah, I'll pop on to the next question for you. This covers off a lot of the questions that we have been getting over the course of the last week, and I can see some of them in the chat now as well. But just, can you touch on some of the similarities and maybe some of the differences in the two services?
Yeah, absolutely. On the, we've been getting very similar requests as well. Ultimately, I can see far more similarities than I can differences. Actually, in terms of differences, it was quite difficult to pick some out, which was always quite nice, and it ties into what you said about ethos. I think quite broadly across the sub-industry of digital wealth management, all the companies have the same goals. And that goal is ultimately to make wealth management, or kind of simple investing, accessible and obviously affordable for all. We live in a world where we have a lot of investing platforms where you can kind of do your own investing. It's cheap and accessible, but you have to do it yourself. And on the other side, you have very traditional wealth managers who are definitely not cheap, and have generally quite high minimums to invest, but they do quite a lot of the kind of fact finding, the suitability and the investing on your behalf. Where the digital wealth management space comes in, it kind of slots nicely in the middle between the two and makes it accessible, makes it people can see what's going on, have kind of lower fees, much more transparency, but they can also have something managed on their behalf, which is tailored to their needs and has that personal touch where we care, as Brian said, for each individual, how they get to where they're going to get to. Do they have the right risk level for what they're doing? Are we investing in the best way for them? Are they in the right product? So this is kind of where we fit in as a sub-industry. Where Wealthsimple and Moneyfarm become even more similar, I find, is definitely we're huge believers in what we call the hybrid model. The kind of having the human touch alongside the digital aspect. So Brian and I are obviously examples of it. Our teams are there on hand quite often over phone, via email, via chat. This is something that obviously other places have, but we take a much more, shall we say, a one-to-one approach, where most, if not all, clients will have a dedicated consultant. They'll have a dedicated advisor to whom they can get instant access. They'll have the direct line. They can discuss their goals, can discuss their investment needs, can discuss the markets, whatever's going on. And this is something that we really, really, really push, because we feel having that much closer one-to-one relationship is very valuable to quite a lot of people. But obviously those who don't want it then have the digital aspect on the other side. So this is, I feel like, where we are the most similar. Then obviously from the rest of it, we have the same products. You have the ISA, the SIT, the general investment account, the JISA to come as well. Both can be done in classical or socially responsible portfolios. So, all of the similarities are there the same. The only couple of things I could think about were there are slight difference in the management fees, which we'll touch on in a minute. And our portfolios are perhaps slightly more actively managed, where Wealthsimple has a bit more of a passive approach. We have a slightly more active approach in terms of the way that the portfolio management team manage the portfolios. And that is what Richard will talk about later on. But the key thing really from a client perspective is come January 31st or whenever the final migration date will be, when Wealthsimple clients log into their new Moneyfarm accounts, apart from the actual interface, their experience from that point onwards should be incredibly similar. And that's from the people we've spoken to is a very good thing, because I get the impression from everybody that they're very disappointed that Wealthsimple are leaving because they were actually incredibly happy with the service that they've received. So that's always a great positive. So basically what we'll look to do is replicate that as much as we can, because that's ultimately how we operate as well. So yeah, Brian, I touched a little bit on the process itself, but why don't you go a little bit more into the specifics about what's going to happen, basically?
Yeah, definitely. So the next month or so is really all about things like this. So basically events like this, as many calls as possible, kind of answering as many questions and queries as clients have about the process, about Moneyfarm, about the transition. We're pretty adamant that nobody should be lacking information or have any kind of queries outstanding. So as we know, your team and our team are here the whole time to book in calls, speak with as many clients as possible, and just make sure we answer every single question that is out there. So that's basically what we will be doing for all of December and the first little bit of January. Then in terms of practical things that will happen in January, Moneyfarm will create a new profile for you and reach out and let you know how that you can access that. As late as possible, Wealthsimple will sell down your current investments and then transfer the cash over to your new Moneyfarm accounts. The cash will then be invested in the same account types that you've got currently with Wealthsimple, which includes the junior ISAs. I see a few questions in the chat about that. And it will be invested in very similar risk profiles as well. So as Chris mentioned, you really shouldn't see too much difference other than a different portal to log on to come the 1st of February. And again, a couple of questions in the chat that I see. If you've already got a Moneyfarm account, these two things will be matched together. The accounts can be kept separate, which is fine, but you won't have two separate Moneyfarm profiles. You'll just have the one that will include your current Moneyfarm account and also the incoming Wealthsimple accounts. So that's how the process works from here. So question back to you then, Chris, is, as you mentioned, the fees is very important to people. Understandably, we both believe in very low cost investment management. So would you mind just touching on the fees side of things and letting the Wealthsimple clients know how that will impact them?
Yeah, absolutely. Absolutely. So if we go on a couple of slides, Richard, please, if you can. Basically, here we've outlined our fees, and it's tiered in the same way Wealthsimple fees are. You know, obviously, as you kind of invest more, the fee structure goes down. Here is the overarching management fee. The structure of the fees is the same, in which you have two fees, essentially. One, which is paid to Moneyfarm, which is Moneyfarm's management fee. This covers everything that we do in terms of trading, in terms of the active management of the portfolio, which we discussed earlier, access to a consultant, whatever you can think of, you know, entry, exits, whatever you can think of there where you might face a fee. There isn't one with us. There's only one management fee to cover it all. The only other fee that we have, or not that we have, but will be faced by clients, is it goes directly to the providers of the underlying funds that we invest in, which is also a fee that you'd face in any other place that invest in any kind of funds. Obviously, something you will have had at Wealthsimple as well. So that, on average, across the portfolio is 0.2%. We mention always the market spreads, which is just an effect of trading. The spread doesn't go to us in the same way you might do with an old school currency provider. This is simply the difference between the price of purchasing and selling an instrument, and over the course of the year, it might affect your portfolio by 0.1%. But the big one is obviously the management fee. So here I've not done a direct comparison. There are sections where we are slightly more expensive, sections where we are less expensive than the existing Wealthsimple model. Now, basically between £0 and £15,000, Wealthsimple's management fees are lower than Moneyfarm's. And then the other place where Wealthsimple's fees are lower are between £100,000 invested and £135,000 invested. And those are the two sections where Wealthsimple are cheaper. Now, if you are in those sections, what Moneyfarm will do is we will match the management fee that you pay at Wealthsimple for 12 months. Also, just to stress that the difference is 0.05%. Sorry, 0.05%. Apologies. So the differences are very marginal in terms of what the fee structure is. Where Moneyfarm is cheaper in terms of management fee is between £15,000 and £100,000, and then once you go above £135,000 upwards, the management fee will get progressively cheaper as well. So when we looked at the numbers, there was kind of an even number in each cohort in terms of who might be paying more, who might be paying less. Like we said, if you are worse off, we'll match it for 12 months and it will give you time to obviously make a decision. Having said that, like I say, it's very marginal either way. And hopefully we are both very competitive within the industry as well. So hopefully that shouldn't be too much of a concern. Excellent. One thing to kind of dovetail onto, which I'm seeing a lot in the chat as well, is performance. So we actually have a slide on that as well. So just to explain how this slide works, this is plotting the annualized returns. So returns per year on average. On the left-hand side is your returns. So kind of being higher on that scale is better. However, what we want to do is match it in terms of how much risk is being taken on, because obviously you can say, well, this portfolio has done well and this one hasn't, but they're very different risk levels. So obviously the key for us is to make sure everybody has a portfolio that's suitable. And to do that, you have to have portfolios of different risk in the same way as Wealthsimple have done as well. One good thing is that obviously everybody's, as you go up the risk spectrum, the returns are getting higher, which is good. So that's how it's meant to look. So that's positive. But the key comment here really is that the pink dots, which are Moneyfarm, are very much there or thereabouts with the yellow dots, which are Wealthsimple. I think one thing that we can say is that people shouldn't expect, to be clear, past performance is no indicator of future performance, and that is very important. But just, as a kind of how we've done so far when we've been in both been in the industry, I would say people shouldn't expect to be doing particularly worse based on but we haven't had a worse track record than Wealthsimple, I would say, there or thereabouts. So hopefully people shouldn't be disadvantaged going forwards. Although, like I say, past performance is not an indicator of future performance. And so we can never have a crystal ball, although Richard will talk us through his closest equivalent very shortly. Good stuff. One last one for you, Brian. What do clients have to do?
Yeah, good question. I think you're doing yourself a slight disservice there on the performance side of things, Chris. It has been very good from a Moneyfarm perspective. And you've got a longer track record than we do as well. So clients really shouldn't be losing any sleep whatsoever from a performance perspective, which I know Richard will touch on a little bit. The last question for me, it will be thankfully quite brief. What do clients have to do? Really not an awful lot, to be perfectly honest with you. I touched on my first answer. We've designed this process to be as seamless as possible. But the number one thing that you should do is ask all the questions now over the course of the next couple of weeks and get comfortable about potentially going across to Moneyfarm and how you and your team will look after them over there. So you can either ask those questions to Wealthsimple, you can ask those questions to Moneyfarm. I see our clients are keeping your team very busy on the Q&A this evening, which is great. That's exactly kind of how it should work. And then really it's just a question of looking out for emails over the course of the next couple of months about how the process will work and anything that you need to do to log into your Moneyfarm account end of January or early February. And then the last thing I know you're going to touch on as well, but I really stress people to book a call with you and your team over there. As I say, grill you kind of one-on-one about their own accounts as well. But yeah, your team have been absolutely fantastic over the course of the last couple of months. And as I say, would encourage all of the Wealthsimple clients to book a call over the next month or so.
Yeah, absolutely. Absolutely. And actually that leads us on to this point here. Just to echo exactly what Brian said, not only do we have these opportunities here, we actively encourage as many of you as possible to get in touch. As Brian said, ultimately, this is a big change. Obviously, potentially might come out of the blue. The biggest thing that we want to do is make sure that everybody feels as comfortable as possible. Like I said at the start, we really cherish the one-to-one relationships that we have with our clients. So as many of you who can book appointments, get in touch, even just send an email, just to kind of really start to build some sort of relationship with us, the better, because we really cherish that. And I think it really helps the service, not just for us to help you get to where you need to be, but also for you guys to feel more at home with who Moneyfarm are, and to trust us a little bit more, and obviously get to grips with, get any fears out that you might have. We'd be more than happy to address anything. I was going to see if we had a bit of time to touch on a few of the questions. It's difficult to pick out because there's loads flying in, which is absolutely fantastic. What I'll do is I'll pass over to Richard now, and then while he's giving you the rundown of what he's doing, I'll pick out a few questions, and at the end I will ask Brian and Richard any questions that you might have, and we can have a quick Q&A at the end. So without further ado, I'll hand over to, thank you, Brian, very much for that. Hopefully we'll see you again shortly. But yeah, Richard, over to you.
Great, thank you very much indeed. Hopefully you can all hear me. So I'm Richard Flax, I'm the Chief Investment Officer at Moneyfarm. And I just wanted to talk a little bit about our approach to investing, what we do, how we go about doing it. And hopefully a lot of it will sound quite familiar to you. We start focusing about macroeconomic fundamentals, which is really a way of saying that we're not in the business of picking individual stocks. We're not saying that this company will do better than that company. We really are taking a broad and fairly diversified approach. The second part, and I'll come back to again, is that we think that managing risk is important. Very similar to what you've experienced with Wealthsimple. We think in terms of building portfolios that sit at the appropriate risk level for our clients. And that is how we build portfolios. We're not just thinking about where you can get the best return, but also it's important, we think, to manage risk. Not just for the days when everything's going well, but for those periods of time when things are a little bit more difficult. With that, the next component is critical. We think that time horizon is the best edge that you can get. People talk about, what insights do you have on markets, and sometimes you have them, sometimes it's less clear, but really spending time in the market is critical. And that means having a broadly diversified portfolio so that you can take advantage of all the different asset classes that you can invest in, but also, and critically, that you manage costs, that costs are kept under control. Costs are something that you have some sense of at the start, at the outset. The returns obviously are much more difficult to predict, but managing costs, keeping costs low, not trading portfolios too actively, keeping management fees low, investing in with instruments where the ETF cost is low. All of these things are critical, and that's a component of what we do, really to ensure that you have the best chance to enjoy as much of your wealth as possible. And in the long term, we think this is really the best way to build portfolios, the best way to manage outcomes for our clients, for our investors, to make sure that they fulfill their goals, as in the way that they would like. Just a word on our governance. When you think about how we're structured, first and foremost, there's an asset allocation team that's led by myself, and we're responsible really for building and managing client portfolios on a day-to-day basis. We think about markets, we think about asset classes, we think about the returns and the risks of the portfolios that we construct. We typically make changes to our portfolios only about 4 times a year. There's no fixed number, there's no fixed date, but that historically has been what the number of changes that we've typically made. And when we do that, we go to the investment committee. So the investment committee is made up of ourselves, the asset allocation team, the heads of the investment advisory teams, and our founders. And really the key point there is that the views that we have and the changes that we want to make are debated and validated by a relatively broad team, including people that we think of as representing our clients, representing the founders, really the most important stakeholders in our business, to debate the changes that we want to make. And really to provide some oversight in terms of the things that we're thinking about, so that there is a context we can explain it to our clients, so that we understand the positions that we're taking and the views that we're trying to express. When you think about how we start, you think about a year in the life of the asset allocation team. Really, every year we take a step back, and it's usually around this time of year where we've just about finished this process, and it's really the strategic asset allocation process. And what we're trying to do is take a long-term view, a 10-year view of financial markets, and say, okay, well, what sort of returns could we expect over the next 10 years? And in some ways, forecasting the next 10 years in aggregate is easier than forecasting the next year. And we build these strategic portfolios that really act as guardrails for any of the changes that we want to make. And the key point there is that we're trying to keep that long-term focus. We're trying to block out some of the noise that you have every day in financial markets, and really keep focused on that long-term, so that we minimize the costs, so that we ensure that our time horizon is aligned with our customers. Within that, we will make some tactical tilts to portfolios. Again, not very often, but we will, and frequently it's as often about managing risk in the portfolio as it is about taking advantage of opportunities that we think we see. But really, it's about marrying that strategic long-term focus and those guardrails with managing the tactical opportunities that we may see. And so when you think about the difference between the two of them, the real fundamental difference, as you see in the charts here, is the bottom is it's really in the long term, fundamentals are what drive markets in our views. It's about corporate profitability, it's about earnings growth, it's about cash flow generation, it's about the yield on bonds. In the short term, though, valuations or sentiment can have much more of an impact. And that sometimes is where there are opportunities, but also potentially risks to be managed, positive risks and negative risks. So when we think about it on a day-to-day basis, there's a chunk of our time that's spent thinking about that long term, that 10-year time horizon. And there's some of our time that we spend thinking about the shorter term, the 1-year view, the 18-month view, to make sure that we've built portfolios that are robust in that context, and that are taking advantage of the opportunities that present themselves. So really, there are three key ingredients here. The first, somewhat obviously, is about the returns that these asset classes can generate, be it equities, be it bonds, corporate bonds, government bonds. The next part is about risk. And by risk, we think in financial market terms. So we think about the volatility, markets going up and down, think about losses, drawdown. And then the third part that in some ways is the most interesting is around uncertainty. And uncertainty is important because it's about having the humility to understand all of the things that we don't know. When we think about the future, we think about the long term, we think about forecasting, all of the stuff that you read about every day, you see in the newspapers. It's about understanding that there's a good amount of noise there, and that noise has an impact on the sort of forecast that you can make. So when we think about building portfolios, we want to understand all three components: the returns, the risks in terms of the volatility, but also the uncertainty, also recognizing that our forecast, like anybody else's, will be imperfect, and making sure that the portfolios we build account for that uncertainty. Forgive me. So just to come back on one more point, you'll see periodically us make rebalances, us make changes to portfolios. We'll make the changes, we'll explain to you what we've done and why we've done that. But it's important to remember that there's a long process underneath that you'll see perhaps a little bit less of. And that's about the strategic asset allocation process, our long-term expectations, all of our daily and weekly work about monitoring markets, about reviewing positions, about monitoring risks, and the debates that we have at the investment committee to make sure that the portfolios are as robust as they possibly can be. All of that is a critical component, we think, of the service that we provide, and a lot of it, hopefully, you won't see. You'll just see the rebalances, and hopefully you see your portfolios grow in value over time. But we wanted to give you some sense about how we spend our time, the things that we worry about, the things that we focus on, and importantly, how we approach the world. And we'd like to think that it's that a lot of what you've heard very much resonates with what you heard from Wealthsimple. We think that our philosophies are very similar. And so hopefully that the very positive experience that you've had at Wealthsimple is one that you'll have a similar experience with at Moneyfarm. So thank you very much for listening. Let me turn you back to Chris, and we can talk about any questions that you might have.
Fantastic. Thank you, Richard. So yeah, just to echo what is said on this slide, we have a very in-depth white paper, and we also did a similar webinar earlier this year discussing specifically the investment strategy. So those of you on the call, we will follow up with an email with a link to the page which has the video and the document. So if there are any more specifics that you would like to find out, go and delve a bit deeper. We'll provide any information that you need. Similarly, if there's anything else that's not on there or has not been in the webinar itself, sorry to sound like a broken record, but please feel free to reach out, because our team would be more than happy to answer questions on a one-to-one basis. Excellent. So to be honest, this leaves us with a good amount of time to answer quite a few of the questions that have come through, which is great. Please keep them coming. We'll try our best, A, to get through them now, B, to obviously answer them on the chat. But if not, like I said, we will definitely be back to you on a one-to-one basis with the answers. So just the first one, really. So I'll put this one to Brian. I mean, ultimately, either of us can answer this. But will direct debits be transferred over to Moneyfarm? What does somebody need to do if they do have an existing direct debit in play?
So the short answer is you don't need to do anything with your direct debits for now. They will continue to go through as normal, certainly for December. We will then be reaching out to you in January with exactly what will happen with those direct debits. Short answer is that the pension direct debits will move across, but the direct debits for other accounts will need to be reset up again in February. But as I say, absolutely nothing for you to do now. No need to cancel your direct debits at the Wealthsimple end. They will continue uninterrupted at least until the end of December. And then early January, we will reach out and just let you know exactly when the finish dates for those direct debits will be, and if and how to set those up again with Moneyfarm.
Absolutely. And just to weigh on the point of the similarities, the reason why the pension direct debit stays in place is because we both use the same pension administrator, Embark. So those mandates, because they are with Embark services, will transfer across. However, obviously we cannot legally transfer a direct debit mandate. Obviously that's why the protection is on place, is an agreement between a company and an individual. So that protection is there, and it needs to be kind of re-signed, should we say, from both sides with Moneyfarm. But again, we will be very clear about instructions on how to set those up and provide any help that is required. Richard, there's a question here about how often the portfolios are rebalanced. It's quite broad, but I'll let you kind of answer some more points on that.
Sure. So we historically we've rebalanced typically around 4 times a year. I would say we've done fewer in 2021, but it's very much dictated by our judgment around financial markets and relatively with as I said, within the guardrails of the strategic asset allocation process. So you should expect to see periodic changes to the portfolios, but not particularly frequent.
Perfect. Fantastic. The next one, which is quite a big one, which is obviously quite a key point to touch on, I'll take myself. The question is Moneyfarm regulated by the FCA? The answer is categorically yes. We are regulated, audited annually by the FCA, and with that comes all the protections that come in place with it as well. One of the questions we receive most is about the protection on client assets, not just from Wealthsimple clients, but from our own prospective clients all the time. So I'll touch on that point because it's quite an important one. We, through the FCA's rule on what's called CAS, C-A-S-S, for anyone who wants to look into it, we have to use a custodian bank who will then basically make sure that client assets are ring-fenced from our own assets, usually in a variety of tier 1 banks, predominantly Citibank or Barclays and other banks similarly. So what is actually going on when a client has an investment with Moneyfarm is the money is sat in, say, for example, Citi. We're being managed by Moneyfarm as a trustee. And were anything to happen to Moneyfarm, that is completely protected and ring-fenced from our own assets. We aren't able to touch it. And as a result, will be kind of distributed back to the client in any negative event. Hopefully that shouldn't be the case. Our strong growth and strong numbers, which Giovanni mentioned at the start, give us a lot of confidence, but that's always a matter of protection and questions on that regard. So we're also covered by the Financial Services Compensation Scheme. So whenever the assets are with Moneyfarm, in the brief 1 day period during the transfer across, they are also protected up to £85,000. So that's the question on there. I mean, this again could be a question for anyone. The value of the investments at the date of the transfer. I see this question quite a lot. What will happen? Will there be any fees? Is there anything on that side of things which is relevant? So Brian, I'll put this one to you to break my monologue a little bit. What happens on that side? Are there any fees associated with selling down? Are there any kind of costs incurred? Will the value be matched at Moneyfarm side? I can touch on that last bit, but obviously it's clear.
So yeah, there'll be no transaction costs whatsoever. So you're not going to be materially disadvantaged by the assets being sold down. You're not paying, as I say, transaction costs. There is a very, very small spread that Chris, you touched on at the very start of your presentation, but you're talking about 0.01 or 2, so it's very, very small in terms of the costs. As I say, no transaction costs. It will all be sold down, and then the cash value as of the sale date will transfer over to Moneyfarm.
Fantastic, perfect. Yeah, and obviously, what is, again, as I mentioned, there's no fees for entering. There's no entry fees or anything like that. So whatever is sent to us in terms of value will be invested straight away. Now, the performance figure that you see at Wealthsimple, so the percentage will be reset to 0, but the actual value of the investments will be transferred across, as Brian pointed out. Good stuff. Another question here that's been actually asked quite a lot in terms of the portfolio and how will it be moved across into what kind of portfolio at Moneyfarm. So again, I'll take this one. What we've done is we've done quite a lot of risk mapping as to which Wealthsimple portfolios match to which Moneyfarm portfolios. So when your account is created at Moneyfarm, your investor profile, which is essentially your general attitude to risk, will be overall matched to your Wealthsimple investor profile, and your portfolios will be matched to the equivalent Moneyfarm portfolio based on a risk return basis. So we might have different numbers of portfolios. We have 1 to 7, Wealthsimple have 1 to 9, but ultimately at the end of the day, it's not about the number itself. It's about particularly the risk characteristics of the portfolios. And we will make sure that the risk characteristics that you're with Wealthsimple will be matched to the ones with Moneyfarm to make sure that you are exactly in the portfolio which is suited to your needs. As you can see from the slide that I put up, you can see quite clearly which ones plot to which ones, but we will definitely, there's a landing page which has been released which provides the link to which portfolios will be mapped to which ones. But if you have any questions about which portfolio it will be and you want to get a more specific answer, please reach out to either party. We'll be more than happy to help. I'd encourage you to reach out to us to start building the relationship, but obviously Brian's team is more than happy to help as well.
Chris, can I save your voice there for a second?
Yes, please.
There's quite a few questions about your tax allowances for the year. I just want to be really clear that this transfer will have absolutely no negative impact on your ISA or pension allowances for the year. So if Moneyfarm is your ISA for this year, that will obviously continue and your Wealthsimple ISA would move across. If Wealthsimple is your ISA, your stocks and shares ISA provider that you're contributing to this year, again, that will continue. The ISA would move over and your contributing ISA for this tax year would then just be with Moneyfarm. So you are able to transfer ISAs across, and basically effectively that is what is happening here. So just want to be really clear that there's no negative impact whatsoever on anyone's tax allowances via ISAs, junior ISAs, pensions, whatever it is, transferring across.
Fantastic. Brilliant. Thank you, Brian. That is a very relevant question, actually, one we get quite a lot. I think we'll have a couple more and then we'll finish off. But like I said, any questions that are unanswered, we will endeavour to follow up with the people individually. One question here, which I feel is quite relevant, is do we get a reassessment when you get to Moneyfarm? Yes, is a short answer. So we will map directly what you have with Wealthsimple at Moneyfarm. But there will be 3 things that we will ask you to do when you first get your Moneyfarm account. The first one will be to set a new password, to obviously make your account your own. The next one will be essentially, we will ask you what your marketing preferences are. What emails do you want to receive? What emails you don't? So you can obviously make sure that you are set up correctly in that sense. And then the last one will be, generally, we will encourage you to retake the risk questionnaire if you so wish to. Obviously, like I say, it should be mapped across directly, but if you want to use this opportunity for a refresh, please use the opportunity. We'll make it very helpful to you. This is something that people can do at any point. Generally speaking, we encourage people to do it once a year, every year when as a Moneyfarm client, but obviously this starting point is a fantastic place to kind of re-go through the suitability, just to make sure every investment is right for you. And again, if you want to go through it with someone, please obviously reach out to us, and we'll be more than happy to help. Looking through for one last question. Oh yeah, this is actually quite a good one, and I'll leave this one for you, Brian. Will old information on Wealthsimple accounts still be accessible after the transition? So this will be things such as CTV, tax vouchers, and obviously other information. What is the best process for clients on this side of things?
Yeah, so your Wealthsimple portal will remain open after the transition for exactly those types of documents, and also crucially including this year's tax statement, basically. So we will pop you an email in probably April, late April, May next year, just to say that your tax documents are ready. And as I say, you'll still be able to log into your Wealthsimple portal at that point and download those important documents.
Perfect. Yeah, there's loads more. Still have a good participation, to be fair. So we'll carry on for a couple more maybe, and then we'll close it time. Does Moneyfarm support 2-factor authentication on its accounts? Yes. Short answer. We take security very seriously, of course. And so 2-factor authentication is part of that. Alongside obviously the security on the assets, we do push this as well. Yeah, I see quite a few questions about the comparison year on year, or different other comparisons, more bespoke comparisons on performance. Again, please feel free to reach out to our team. We can provide whatever data is required, and we're more than happy to share anything. We want to be very open with information about anything at all, specifics, bespoke fees, bespoke performance figures, anything that people want in terms of, rather than the broad information we're giving now. So average fee rate on a specific amount, this sort of thing, more than happy to give, which is quite a lot of stuff which is being asked about. Good. All right, look, we'll leave it there for now. Thank you everybody so much for joining. Hopefully this has been very useful. Like I said, we really encourage anybody to follow up with more questions. We will obviously answer any of the questions that haven't been answered. If you want to find out if your question has been answered and want to find out more, again, please follow up. We are available. Up until the migration, we'll be very happy to answer any questions that you have, so please come to us. And then following the migration, we'll make ourselves much more available as well, to be able to offer ourselves up and be there for people where they need it. The last point is there will be a short survey after this recording. Please, it would only take a couple of seconds. We'd really like to keep for people to go through it and answer it, and that will really help us going forwards to make any sort of webinars much better. But yeah, for now, I'd like to thank everybody for logging in and wish everybody a lovely evening. Thanks very much.